Since yesterday, we have been talking a lot about economy, opportunities, and challenges, especially during these COVID times, and in fact, the economy post COVID, post pandemic. So, now this is the time for a wonderful presentation by Mr. Rajeev Ahuja. He is Executive Director, RBL Bank. Sir has chosen a topic today, disruption in financial services. Sir, this is again going to be one of the very interesting presentation for all of us because we have been discussing about opportunities, challenges, financial services industry. We are looking forward to hear from you, sir. Over to you.
Thank you, Dimple, and thank you everyone for giving me the opportunity to share our experiences. And I was a little lucky to have logged in a little early, and I heard Mr. Singh and talk about some of the changes which he's seeing in the mutual fund industry. And what I'd like to kind of also share with you that some of these changes have been in vogue for quite some time, and actually they have been slow but steadily accumulating the scale and the advantages. And I think in the last 12-15 months, especially in the last 9 months post the advent of COVID, some of these changes are becoming very manifest. uh, Apologies upfront, this is not about the mutual fund industry, the investment industry, but more generally about how changes in customer expectations, technology, standards and protocols, and the regulatory environment is leading to dramatic shifts in the way financial services institutions have to organize themselves both internally and with their people and skill wise. So without further ado, I'll share with you what our view of this is. So, Dimple, is this visible to you, the screen? Anyway, let me start. Uh, the the disruption in financial services is not unlike what we've seen in other parts of the industry spectrum. So the way we think about financial services is, will it go the way of media, food, broadcasting, etc.? Many of you who have probably spent 10, 15, 20 years in the business realize that our own consumption patterns of media, food, television, cinema have changed over the last 10, 15 years. What was something easy, you make your food at home or you go out, has now infinite combinations with delivery firms giving food at home of the most choicest variety. And in fact, in the pandemic, restaurants suffered a lot more, and the food delivery companies actually gained a lot more eventually. The same thing goes for media. Uh, Media was being fragmented, and you'll hear this comment from me, fragmented and unbundled a lot more over the last 4 or 5 years. But during the last 12 odd months, media has become even sharper from a fragmentation perspective. Today, we are a little wary of going to closed environments like retail malls and cinema halls, but are very happy to see media on our mobile phones and television. And I don't think some of these habits will change even once the vaccine is fully in place and people's inhibitions and anxieties get reduced a lot. This period of 9, 10 months and the changes which have happened before that are going to be very long lasting. So, what do these changes mean similarly for financial services? You see, financial services, we are all participants, we're all part of institutions. We think we are given a higher birthright.
Rajiv, sir, may I interrupt, please?
Yes, please.
Sir, are you able to share your screen? Are you facing some issue?
I am right now, uh, I'm sorry, let me try once again, 1 minute.
Yes, please.
Yeah, I think I skipped one thing. Sorry, 1 minute. Um, is this
Yes,
there now?
perfect. Perfect,
Okay,
perfect.
my apologies. I'm still a technophobe in some manners, even though Mr. Vyas had tutored me well enough 2 days ago. But I hope you heard me.
Yes, yes, we heard you. We heard you well, sir, and now it is
Okay,
getting visible. Yeah.
so this is the only slide I've shared, so nothing missed. So this is an interesting slide of a religious person looking for donations using Bhim UPI. I mean, I don't know in my own careers did I ever think that something like this would happen. So from a financial services perspective, we have to learn that things are changing and changing quite dramatically. What I like to just give you a flavor and go back maybe 8, 10 years and give you a few pointers on how things are changing, have changed, and what does it mean and what does it cause in the last couple of years. If you've seen way back in 2011, 12, 13, we had many things happening from a government perspective. Aadhaar, IMPS, UPI were being initiated. You had newer business models from people like Paytm, Equitas, Ujjivan, and India became a big mobile first country. And I think if I have to leave anything behind, that the new generation of consumers of the last 10 years and the next 10, 20 years will be unlike many people we have been interacting with in our careers. And this will define our potential for success or not succeeding. And then you are seeing many standards and protocols on the bureaus. uh, Large technology firms like Google, Amazon, which have become very, very entrenched in our lives. I don't know how many of us now navigate our roads from our instinctive knowledge of roads. Almost all of us are checking our maps to know the time of arrival and whether the traffic is is huge or not. And I think these changes were getting embedded. But I can tell you, as people who've got a long history in financial services, we all felt that these changes would not make a major impact because they were being viewed in a very isolated manner. But as these changes became more and more entrenched and became ubiquitous, we are seeing all of these forces make a huge impact on size, speed, and the consequences. And I think you heard Mr. Singh talk about the impact in the mutual fund industry, but I can tell you that it's happening all around us. So I've given you some symbols of companies and platforms on the presentation. These never existed 10 years ago. So Aadhaar, DigiLocker, GST network, some of the private companies like Zeta, Signsy, obviously NSDL has always been around. All of these people are enabling and many more in rapid digital adoption. And COVID has actually made everything on a super fast speed. Now, why are standards and protocols very important? Because they lower the cost of innovation and services. Imagine if today your client who's investing in mutual funds with the mobile app, you know, in an SIP format, has to write out a check every time they make an investment, which was the case not so long ago. Please imagine the size of the business will shrink dramatically. The friction we all will experience in consuming those services will make us walk away, which is why when these protocols and standards are in place, the size of the industry will expand dramatically. The third point is your customers today are empowered. I just have to ask you from your own personal lives today, do you tolerate a 5 minute delay on your taxi, Uber, Ola while they were on? Do you delay, any payment not happening on your e-commerce website? Will you tolerate any delay on your mobile app? We have had instances over the last few weeks on some large banks facing outages. and you can see the social media outcry. We are empowered as consumers, we are knowledgeable, and we demand services to a very high standard. So today, a financial services institution or a bank cannot take refuge and say, वो Amazon करता है, वो बैंक नहीं कर सकता. I don't think customers will expect that anymore. Fourthly, we have very many open stack infrastructures. See, unlike a lot of Western countries, India has chosen to build very open platforms and infrastructure for the digital enablement. So Aadhaar, IMPS, UPI, DigiLocker, and many, many more. Even in your industry, I know that common KYC is becoming a very important part of how customers get more control over their lives. I do remember when I started investing in mutual funds, somebody, one of you would come home, help me understand the investment, what to do, and as Deepak was talking about, also do asset allocation. But a large amount of time was spent in paperwork, check writing, and then if there was any change, you had to call your advisor back. And when there was redemption, it became an even bigger problem. But today, all of these things are taken care of by the technology and data standards. And lastly, we are seeing more and more emerging technologies come about. Video KYC, which I know in the securities market has been in vogue for a while, is now happening in the banking market. So for the last 3-4 months, even as the pandemic was there, we were able to open thousands of accounts every day because of video KYC. And video KYC is now a law. So what it means is that the friction or the inconvenience a customer faces while opening an account or closing an account or making a payment can never be now tolerated. And the most important part, which I can tell you as human beings, we are very, very, very slow to understand that these changes are not additive, but they are exponential. They are multiplicative. So think about open standards like Aadhaar, IMPS, technologies like video, KYC, voice, AI, standards on 4G, all of this, along with an empowered consumer, is making this market and the opportunity very exponential. I just want to share a few power words here, which are now becoming more and more important, and I'm sure they are equally important in your industry too. And on the other side of the slide are companies which did not exist about 8-10 years ago, and today are potentially becoming larger than some banks. And I mean, all of you probably heard about Ant Financial, which has a history of about 15 years. If it were being IPO'd, it would have been worth more than many banks with trillions of dollars of balance sheet. So Zerodha is the largest retail brokerage in the country, as you all know, and it's been built around a very simple premise that people want to take the control of transactions in their own hand. Cred is only 2 years old and it's emerging as one of the most exciting consumer credit platforms. PayUmoney and RazorPayX are some of the largest platforms on payments. And payments usually was a bank's preserve. Digit is an online general insurance company which has disrupted many other general insurance businesses. M-Swipe Neo. So the number of players who have come in the last 7-10 years has been enormous. It doesn't mean all of them will succeed. But all I can tell you is that even if 2 out of 10 succeed, they would have changed the expectation of your customers, forcing people like us to change our own behaviors and organization. What used to be a headwind in India has become now a tailwind. I mean, in India, the headwinds were always logistics, communication, lot of new different standards, paperwork. But all of them have become now great tailwinds because of the efforts over the last 7-10 years by the government, the regulators, and the whole institutional framework. So today our time to market has to be really short. We have to invest in customer experience. And this is a age-old thing. Will technology take my job away? And I was fortunate to also hear Deepak talk to Saurabh about estate planning. Now, fortunately, estate planning, not all of it can be digitized. You still need a very, very high quality and highly empathetic advisor who understands the life stage of their client. So we also have to adopt, but the customer experience for very basic things has become very important. And lastly, it's about scale and data. In this world, if you do not have scale and data, you will not succeed as an institution. It doesn't mean that an individual will not be able to make it because you bring a lot of care and attention to a customer's issue. But if you're running a large mutual fund, a large bank, you need to build scale and a data contextuality for the businesses you need to do. So what does it mean for banks, for us? And this is a long internal quotation we use. And I'll read it out for your benefit because I think it's important. And I also heard Mr. Singh talk about some of these issues. Where traditional investment structures are not very relevant, we are in that zone right now. Margins on traditional services are collapsing as customers are empowered. Unbundling leading to faster attrition. But our own costs and mindsets remain entrenched. Change at first is seemingly slow, lulling us into complacency, but then it is quite rapid, hurting our overall economics and competitive standing. These 8, 9 lines have been true for years and years and years, except in the last 5, 6 years, the pace of change has become enormous. I'd only like to highlight to you that in the last 10 months, you've seen a car company, Tesla, attain amazing capital market valuations. Now, you and I can argue whether Tesla's valuation is justified or not, but the market is giving you a message that Tesla is built for the future, whereas the traditional car companies are grappling with their incumbency and current businesses. And that's the way the market and the world will operate. India is not going to be any different. Perhaps in certain segments and certain businesses, our changes will be slow, will be measured, will be regulated. But in many of these areas, your customers are already demanding and getting these kind of services. So what did it mean for a bank like RBL Bank? Our journey is just about 9, 10 years old. We did not have the legacy distribution, the customer base of the larger banks, the private banks and the public sector banks. So what did we do? We started partnering with people. And I know in your business, partnership actually is the main ethos of an advisor, of a manufacturer and a client. So we said, why go and acquire customers? Why don't we partner with people to service their customers on financial services? So early in October, we launched a co-branded card with Zomato. Zomato has about 40 million customers, and many of whom have repeat buying behaviors with Zomato. So we said, why don't we combine your customer understanding with a co-branded credit card, which is designed for the Zomato customer. And this is just still in a pilot stage. So if any of you wants to try it, please do. And the customer journey has been sketched out for a Zomato kind of customer. The rewards and recognition and loyalty is a lot in foods and entertainment. Now, if I were a large bank with 30, 40 years of experience, 5,000 branches, 50 million customers, do you think I will have the humility or the space to give and work with a company like Zomato? Perhaps not. My ethos would be, I know it all, I have all the customers, and frankly, I don't need you. But we did not have any legacy. We were reborn in 2010, 11, and we said we don't need to reinvent the wheel. Let's work with customers of our partners. The same thing we started doing with Razorpay, which is an exciting company. And by the way, it was formed in the year 2014. So it's barely 6 years old and it's already considered a unicorn. With Razorpay, we are piloting SME technology-driven services for banking. Now, Razorpay has a lot of SME customers on their payment gateway. We don't run a payment gateway. So we said, why don't we combine that and do it jointly? And my last example is merchant acquiring, which is what you do when you visit a merchant and you use a POS device. And this is a company called M-Swipe, one of India's largest merchant acquirers. We did not know this business. In fact, we tried getting into this business in 2011 and we fell flat on our face. It needs a different DNA, a different focus. So we started partnering with M-Swipe for their merchants, becoming the banking backbone behind their efforts. And today it is the largest merchant acquirer in the country and we are benefiting immensely with this partnership. So the mantra is, for us at least, we call ourselves Partners Ka Bank, and I've given you some logos on the left side in terms of how we've done. And interestingly, because of this ethos, because of being humble and transparent and recognizing that technology, consumer empowerment, and newer business models are not something we can disregard. This is what we've managed to do over the last 5-6 years. We rank #1 in POS coverage. We rank #3 in the AEPS transactions processed. And we are in the top 5 of overall mighty digital performance. And none of these things would have happened if we had chosen to actually be conventional in our thinking that we want to own every aspect of the customer experience. And I say in your business, this partnership unbundling has been around for decades. So I think it's a great opportunity for you all to understand how consumer habits are changing, how technology is making things faster, how standards are reducing the friction, and how a new generation of consumers, which is mobile first, digital first, expects a different experience. And therefore, how you repurpose your skills, your behaviors in addressing the newer and newer needs, along with your partners, which is the mutual funds and the insurance industry. So I'll close here. Thank you so much for your time and attention, and happy to address any questions you might have.
Thank you so much, Rajiv sir. It was indeed a phenomenal presentation. It is again in line with our theme. What are we looking forward to learn from this event? Thank you so much for the wonderful presentation, sir, and embracing our event.
Thank you so much, Vipul. Thank you. Thank you, everyone. Bye-bye.